Hey guys, how's it going? Alright, I want to do a quick video, and like I told you before, I try to get the gauge of sentiment of a variety of people, people that I sometimes don't agree with, but also people I agree with. And I'm looking at Mike Norman's video. I'm sure a lot of you guys know who he is. And from like 2000, like what, 9 to 2015, he was pretty much pounding the table. He was being bullish, and even this year he was bullish. And then all of a sudden, I started to see signs where he's saying that, like, right now, the economy looks weak. And then if you look at Peter Schiff, right, he always says the economy looks weak and short the dollar, right? Mike Norman's saying not exactly the same thing, but you see him saying short the dollar, economy's weak, and the stock market rally right now is not justified. We'll have to wait and see what type of economic team, or we have to see what type of government Trump is going to enact. Is it going to be the government that Trump advertised, or is it going to be a little mellowed down version of it because you know how dysfunctional Congress is? Now, I wanted to look at a few things that I'm looking at right now and trying to see, okay, what, how are the big boys positioning themselves right now? And I found this really interesting with copper, right? You're going to say, why with copper? Well, I'm looking at the COT report, and I showed you what successful trader Larry Williams came up with. And long story short, if there were more commercial buyers in the futures market than sellers, right, then most likely the price would go higher. And what we saw last year with the price of copper, right, it was getting beaten down, beaten down, beaten down, but then you had a large amount of individuals going long in the copper market, the hedgers, the smart money in the market. They're always early, but they're early because they hedge their prices, because they have product to deal with out in the marketplace. Now, I realized over the past 5 years, the commercials have been the most negative, and this is going back 5 years. People usually say look at 3 years going back, but I just did 5 years because that's when the commodity started to blow up. And what I've noticed is that copper's an extreme on the commercial side, and I'm just wondering to myself, okay, we knew commodities went down 2011, but you have to ask yourself the question, why are these guys, the smart guys in the marketplace, selling more copper futures than they were in 2011 when prices were to go down? That's just something to think about here. And I noticed for natural gas too, I don't have the chart for it, but they have over the last 5 years the most naked short positions, right? They're hedgers, so that's why they do that. Some people say it's the big banks manipulating, whatever it is. Whenever you see a large concentration of the commercials, either on the buy side or the sell side, you should listen to it. Natural gas, I saw the same thing. They're the most net short in the last 5 years. And then oil, that's really interesting too. They are the most net short within the last 5 years as well. Almost there. Let me rephrase that. So I'm thinking to myself, okay, we know that the stock market rally right now, it just seems a bit exaggerated because we don't know exactly what Trump is going to do. We don't know if there's going to be a wall. We don't know if there's going to be the infrastructure spending. We don't know the tax cuts Congress will allow because Mitch McConnell said the other day, hey, you know what? We're not going to pass everything Trump wants. And then I showed you a video last week about buyers coming in, commercial buyers coming in, buying bonds, right? You see all these guys on stock twits, not bashing on anyone in particular, or like CNBC, you have these traders saying, I want to short the bond market. But you have to look at bonds. Why weren't people excited about shorting bonds in June or July of this year when the commercials had the largest short position? And now it's completely reversed. The commercials are net long. If you look at the 10-year note, if you look at the 30-year bond, right? They are net long. So this just got me wondering, okay, copper, which is a good indicator of the economy, right? People say that it has a PhD in economics. Well, right now you can't see in the prices because copper has rallied big time. But the last week, I don't know if people have noticed it, copper was down. And I was on StockTwits saying that, hey, copper may have short term topped out. That was my gut feeling, but I could confidently say after looking the last COT data, copper is most likely going to go down from here, even from last week's sell-off. I just feel that the large short position, the smart money in this market is going to push this down. Now, I wanted to look at also the yen, and the yen is the carry trade. This is, I think, an important currency when it comes to risk on, risk off. And if you notice, like earlier this year, right? The signal here was zero, so that means to sell the yen, right? And the yen didn't really do much until what, the last 4 or 5 months. You started to see a negative reaction in the yen. Markets has been going up, gold's been going down, but now you're starting to see this ratio over 0.60, and this data is actually before the Fed announcement of how they're going to potentially have 3 rate hikes. I don't see that happening. I could see maybe 1 or 2, but not 3, based on the data that I've been seeing. And so this is in an uptrend right now of how they're starting to pile on more buyers in the yen market, right? So when you buy more yen, or when the buyers of yen exceed the sellers of yen, right? That means that risk is going to most likely come off, the yen carry trade unwinds, gold prices go higher, stock prices usually go down. So, one thing to notice is I feel the trend is continuing, more buyers for the yen. If you see this indicator go to 1, that would be a good probability that stock price is going to go down, gold's going to go higher. And yeah, let's look at the last indicator that I have, the dollar index, right? So over here, I wish I found out about this chart a little earlier. I would have probably placed my long euro position at a better price, but you know what? You learn from your mistakes. But going back to here, this was like 0.38, and if it's a zero, right, for Larry Williams indicator, that means it's a good sell. Probability says that you should sell here. Probability when it goes to 1 is a huge buy signal. And I've told you what I thought about the dollar in videos past. And it looks like the trend is going to zero pretty soon. And if that happens, I'm going to add a unit to my long euro position, because ultimately you see the if you see the yen unwind, the other reaction, the euro, is it usually goes higher. I mean, the euro goes higher, and thus the dollar index goes lower. And you're seeing a lot of commercial buyers right now shorting the euro. I mean, shorting the dollar. They're not shorting the euro as much as they were in the week past, but we got to see the data from the COT after the FOMC. This data is Tuesday, so we're just going to have to notice what changes were made. Long story short, guys, when Schiff and Norman are on the same page, I don't know, man. This does not look good. But tell me what you guys think, and I'll talk to you later. See ya.